Welcome everyone to another weekly edition of the Argentina Brief, another packed one in Milei's Argentina, so let's break it down. And remember, you can read the full thread every weekend in greater detail at the Argentina Brief handle on X. So first, arguably the most important headline of the week, and that's that the government confidence index hasn't stopped falling since the midterms in October last year. The Torquato di Tella University Index dropped 12.1% month over month in April, hitting just 2.02 points on a 0 to 5 scale. And that translates to Milei mustering roughly 40% of the vote if elections were to be held today, which is still pretty good, to be fair. But we're talking about the fifth consecutive monthly decline, completely erasing that post-midterm bounce. Every component of the index has deteriorated, including perceptions of honesty among government officials, problem-solving capacity, government efficiency, concern for the general interest, all down. The steepest drops were among men aged 30 to 49 with secondary education, and the drivers were pretty clear: ongoing scandals and real wages that continue losing ground to inflation. They still haven't recovered since pre-December 2023 levels, and that is leading to some erosion in support. Milei still has 18 months. I think it's between 15 and 18 months. I'm not exactly sure there, but plenty of time to reverse this trend before the October 2027 elections. But right now, the momentum is working against him for sure. Second, we have to talk about the bond market and investors in general that are increasingly focusing on what may happen after Milei leaves office or after this term ends, if he's reelected or not. With his approval rating down, they're asking the crucial question: can these reforms that Milei has put forward survive beyond this term? Looking at what the market is telling us, bonds maturing in October 2028, after Milei would potentially leave office, are trading at yields 360 basis points higher than similar bonds maturing in 2027 while he's still in power. That 3.6 percentage point spread represents the premium that investors are demanding for the risk that a new government reverses course on many of these reforms and the stabilization of the economy in general, inflation down, the fiscal surplus, etc. Credit default swaps, as Bloomberg reported, paint a similar picture. They're pricing in a 5% probability of default within 1 year, but that jumps to 22% over 3 years and nearly 60% over the next decade. The market sees growing odds that whoever wins in 2027 might abandon fiscal discipline and trigger a debt crisis. So the political risk premium is still embedded across the curve, and that's not a small issue, to be sure, given the maturity walls that Argentina will be facing within the next 2 years. We're talking about 8.5 billion due to private bondholders alone in 2027. So third, the government has been responding to such critique from the market and from the opposition. Milei was at the Fundación Libertad dinner this week. That's a think tank where he presented 20 charts to the audience, sourced from INDEC, the central bank, and private consultancies to defend his track record so far. The data made a strong macro case, right? The consolidated fiscal deficit shifted from 15% of GDP in 2023 to a projected 0.2% surplus this year, which is a complete fiscal reversal, as we've been talking about here. The public debt to GDP ratio has declined from 157% down to 73%, as Milei presented at the dinner. Annual inflation fell from 289% at one point in the early part of his administration, down to about 33% annual right now. Exports are on track to reach a record $100 billion plus mark for 2026, and the central bank has accumulated a net $28.6 billion in reserves since Milei took office. It should be said that it hasn't actually accumulated because it's used much of that to pay pre-existing debt, right? But foreign reserves have been rebuilt. They've gone from negative 11 billion, roughly, when Milei took office, to about zero currently. And Economy Minister Luis Caputo indicated that monthly inflation should begin trending down from the April surprise of 3.4%. He pointed to encouraging early indicators in March economic activity, with tax revenue turning slightly more positive, maybe even growing in real terms. We'll have to see when that data is out. And industry and its output and construction also showing good signs on the tax revenue front. The data presentation is designed to shift the narrative. Poll numbers may be soft currently, but the government insists that it's worked wonders with the economic fundamentals in Argentina. Earnings season has started for Argentine corporates, with Mercado Libre and YPF posting this week, but last week we had the likes of Vista Energy, which is Argentina's second largest oil producer, led by former YPF CEO Miguel Galucho, and that company posted first quarter revenue of $865 million and net income of $694 million, representing a 58% year-over-year growth and surpassing analyst expectations. And speaking of YPF, its board and a shareholder assembly meeting, that is, approved a 10-for-1 stock split on locally traded shares on the Buenos Aires Stock Exchange. And that will be 10 local stocks for every Wall Street ADR. And that split is scheduled to take place in the month of June. The move aims to boost access to YPF stocks, to a full YPF stock, that is, by retail investors. And YPF is actually looking to make stock buying available in its digital app, which is used by clients to pay for their gas when they go to YPF stations. And on Milei's privatization front, the joint venture between Genneia and Edison Energia submitted the highest economic bid for the government's 51% stake in Citelec, which controls Transener, which is Argentina's largest electricity transport company, and it has a 500 kilovolt high voltage transmission network. Their offer beat competing proposals from Central Puerto and Edenor, at least in economic terms, and it cleared the $206 million reserve price set by the Energy Secretariat. So there's the week. The fundamental tension lies in market uncertainty about the 2027 elections, and Milei has undeniably dipped in popularity. But like I was saying, plenty of time still for a rebound, and that's especially true at the micro and consumption levels if we take into account that interest rates have been coming down dramatically over the last month or so. So we'll have to see if that gets bank lending going again, as well as credit card spending, for example, and how that might impact Milei in the polls. Watch out for the second episode of the Argentina Brief podcast this week. We just recorded the second episode this Sunday with Dan and Ali, so that should be coming out midweek on Spotify and YouTube. See you soon.